Imagine waking up to see your Bitcoin holdings slashed by 13% in a single day, the steepest plunge since the FTX disaster rocked the world back in November 2022. That's exactly what happened on Thursday, when BTC tumbled from higher levels down to a low of $61,000, wiping out billions in market value and triggering panic across trading floors. But hold on. By Friday, it clawed its way back above $70,000, leaving traders stunned and the crypto community buzzing with questions. What caused this roller coaster? Is the worst over or just beginning? This isn't just another dip. It's a seismic event in a market that's already down nearly 50% from its October 2025 peak of around $126,000. Picture the scene. Liquidations cascade like dominoes. Over $2 billion in positions wiped out in days as leveraged traders get margin called into oblivion. The total crypto market cap shed hundreds of billions, with Bitcoin leading the charge downward before this surprising snapback. If you're trading stocks, Forex, or dipping into crypto news, this story ties it all together. Global risk-off moods spilling over from equities, precious metals slumping, and tech stocks under fire. Why does this matter for your portfolio? Because Bitcoin doesn't move in a vacuum. Forex pairs like USD/JPY feel the ripple from safe haven shifts. Stock indices like the Nasdaq get dragged by growth stock retreats, and even commodity markets echo the fear. Stay tuned as we break it down step by step, pulling straight from the latest reports. No hype, just the facts fueling this frenzy. Let's rewind the tape on this wild ride. Bitcoin hit its all-time high near $126,000 back in October 2025, riding a wave of optimism tied to institutional inflows and ETF hype. Fast forward to late January 2026, cracks appear, with the first big daily decline since 2018, sparked by news of President Trump's nomination of Kevin Warsh as the next Fed chair, a figure known for pushing higher real interest rates and a leaner Fed balance sheet. Risk assets tremble as higher for longer rate vibes sink in, no early cuts in sight. By early February, the sell-off accelerates. Weekend trading sees BTC dip below $80,000 amid thin liquidity, aligning with a global risk-off wave. Equities down, gold and silver slumping as former safe havens falter. Thursday, February 5th, or 6th, depending on your time zone, delivers the hammer, a 13% crater to $61,000, the kind of move not seen since FTX's implosion. Liquidations explode past $2.5 billion, longs and shorts alike, getting crushed in a vicious cycle. Enter Friday. BTC bounces hard, up over 11% to reclaim $70,000, with all coins like Ether crossing $2,000, XRP, Solana, Dogecoin, and Cardano piling on gains. By February 7th, it's hovering around $66,000 to $70,000 per some trackers, with the market cap stabilizing after shedding $467 to $500 billion in a week. This V-shaped reversal, it's got traders eyeing relief, but charts scream caution. Think of it like a Forex flash crash, sudden, brutal, but quick to partially reverse as liquidity returns. Stocks, Nasdaq's tech-heavy retreat mirrors BTC's pain, while broader indices hold firmer. We've got the timeline locked in. Now what lit the fuse? Buckle up, this drop wasn't random. First up, ETF outflows. U.S. spot Bitcoin ETFs saw net redemptions, topping $1.5 to $2 billion in early February, yanking the steady bid that propped up prices during past dips. BlackRock's IBIT and others flipped from inflows to heavy exits, signaling fading institutional demand. Macro squeeze hits next. Fed's hawkish tone, no rate cut soon, ramps up real yields, crushing risk appetite. Add tariff threats on autos, semis, copper from the Trump administration, geopolitical flares in the Middle East, and Venezuela sanctions, and you've got a perfect storm. Bitcoin, treated like a speculative tech stock, tanks with Nasdaq as Microsoft and growth names falter. Leverage amplified everything. Then weakened liquidity sparked the initial slide below 80K. Then forced liquidations over $2 billion snowballed the Thursday bloodbath. Crypto fear index hit extremes at 23. Miners selling early due to energy cost, echoing Q4 2025 woes, and credit stress and tax seal the deal. Broader context, commodity sell-off, precious metals lose safe haven shine, dragging BTC into the abyss. Forex traders note this. USD strength on hawkish Fed bets, pressures risk currencies, spilling into crypto. Stock market parallels, Bitcoin's 50% retreat from peak mirrors post-rally corrections in high beta names. No single smoking gun, but this cocktail explains the violence. From the ashes, rises 70K. Friday's 11% surge flipped derivative sentiment, shorts covering, longs piling in, as risk appetite flickered back. Altcoin rally joined the party. Ether at 2K, Sol, XRP, Doge, ANA surged 10 to 20% Friday. Total cap hit 3.13 trillion earlier, but shed 500 billion weekly, now recovering. BTC dominance 59.1%, signaling flight to majors. Forex tie-in, BTC USD mirrors USD strength cycles, risk-off boosting dollar index. Stocks, crypto winter vibes hit tech, but S&P holds better. Miners under pressure from energy costs, selling BTC early. Crypto doesn't isolate. Nasdaq tech retreat drags BTC as speculative growth. Fed's Warsh nod spikes rates, hurts Forex risk pairs, crushes BTC. Geopoliticals, Middle East, Venezuela add fuel. Commodities down, no safe haven bid. Trump tariffs loom over stocks and Forex, risk off everywhere. Drop not end of crypto per experts, cycle phase. Relief rally to 76, 78K. If 70K holds, volume up. Deeper test 62, 65K. Risk 70K talk. Predictions I 73K by late get. Watch ETF flows, Fed chatter, geopoliticals.
Bull case, hold 60K, reclaim 90K. Bear, below 60K, 60% off peak. This 70K rebound after 2022's worst day echoes market resilience amid chaos. Track levels, flows, macros. Subscribe for daily crypto stocks Forex updates. Drop comments, buy the dip, like, share.